Hello and welcome. You're watching Global Lens. I'm Parikshit Luthra. The International Monetary Fund has described India as a key growth engine for the global economy, while flagging the deceleration of China's economy. IMF chief Kristalina Georgieva praised India's bold reforms, including the implementation of Aadhaar and recent cuts in GST rates. Georgieva said India proved its critics wrong by successfully rolling out a digital identity system on a massive scale, while commending India's economic momentum. She added that India could benefit from closer trade integration with partners. This week, IMF revised India's growth forecast for FY26 upwards to 6.6% from 6.4% earlier, citing a strong first quarter that helped offset tariff headwinds. However, the fund expects India's GDP growth to moderate to 6.2% in the following fiscal year. Notably, India remains among the countries facing some of the highest US tariffs at around 50%. Turning to China, the IMF kept its 2025 growth forecast unchanged from its July estimate at 4.8%. It projected a further moderation to 4.2% next year. The institution said China's outlook remains worrisome, with the property sector still on shaky footing 4 years after its bubble burst. It also warned Beijing about its excessive trade surplus and urged a rebalancing towards domestic demand to reduce vulnerabilities in the export sector. According to the IMF, China has been hit harder than other regions by tariff-related pressures. Joining us now to discuss all of this is Krishna Srinivasan, Director, Asia and Pacific Department at the IMF. Krishna, thank you very much for joining us here on the program. Let me begin by asking you about your latest outlook for the India market. It has been revised upward for 2025, but when it comes to the next fiscal year, it has been revised downward to 6.2%. Give us a sense of the kind of impact US tariffs are set to have on the Indian economy and which sectors could be hurt the hardest.
Thanks, Parikshit. So as far as the forecast is concerned, for 2025, it's 6.6%. And there are a couple of tailwinds which led to the revisions of the forecast and one particular headwind. The headwind, of course, is the tariffs from the US. And the tailwinds were basically the first quarter, the June quarter, the numbers came out much better than we had expected at 7.8%. And then you also have the GST reform. So these two factors kind of offset the impact of the tariffs this year for 2025. So we have upped the forecast to 6.6%. As you said, it's about 0.2 percentage points higher than what we had before. For next year, we have revised our forecast down to 6.2%. And that reflects the fact that, the way we do our our forecast is based on what are the policies which have been announced. And so it takes into account the 50% tariff that the US has imposed on India. Assuming that the tariff negotiation between India and US get resolved in a way where tariffs are lowered, then that would be a significant upside risks to the growth next year. So that's as far as the forecasts are concerned. In terms of sectors which are being affected, it's the ones like the garments, leather and textiles, gems and jewelry. These are sectors which are affected by the US tariffs, not so much the pharmaceuticals. And what worries us a bit is that these sectors are also sectors which are labor intensive. And so there could be some amount of labor displacement if the tariffs continue to bite and India exports less than these sectors.
Right. Now, in case of a trade deal, currently we're at least seeing positive commentary by both sides. Now, in case of a trade deal and lower tariffs, what could be the upside and revision in outlook like?
So again, that's very hard to quantify without knowing the details. So I would say it's upside risks to growth. We have it at 6.2% now. So think of this as we don't know what the tariff would be after negotiations are finished. So depending on what the number is, we will revise accordingly. So it's very hard to quantify the upside without the precise numbers on the tariffs.
Right. I would also like to ask you about IMF's financial stability report, where you've said that risks to global financial stability remain elevated. You've also said that governments should take decisive action to strengthen economic growth and rationalize public spending to improve living standards and alleviate fiscal pressures. Now, in the context of India, considering that we're living in times of trade uncertainty, there is a US-China trade war, there are export controls that China has imposed on India, the US-India trade deal is still being worked out. What should India do with its public spending to ensure highest growth and benefits to its citizens?
So, Parikshit, India has been very prudent when it comes to fiscal policy stance. The government aims to meet its target for this year, the fiscal target. And, I think that's the right way to do things. I think what we are saying is if the impact of tariffs is going to be biting on these sectors which I identified, then some kind of targeted support for viable firms and people affected by these tariffs would be something which we would look upon kindly. And that's something which, not just India, but other countries which have been affected by the tariffs are considering. So where you have an impact on sectors because of tariffs, some targeted fiscal support would be welcome. But more importantly, in the case of India, the fiscal stance has been appropriate so far. They've been very prudent. The overall macro setting in India is pretty good in terms of both the monetary policy stance where inflation is coming down, fiscal where debt levels are being reined in, and so on. So, but what we would recommend, not just for India, is the fiscal situation across the region is a bit worrisome. In the case of India, less so. But if you want to provide support, provide more targeted support for viable firms which are being affected by the tariffs.
So you mentioned the GST reform as an upside, especially in revising your outlook for this fiscal. But what will be the sustained impact of the GST reductions and rationalization on India's growth and consumer demand, according to you?
So definitely the consumer demand, we will see some amount of fillip being provided to consumption through these GST reforms, which is very important. But what I would underscore, Parikshit, is that this has a very important bearing on the business environment, right? So when you talk in terms of rationalizing interest rates, making sure that compliance, administration, all that improves, it's a great way to improve the business environment for investors. So one thing which we have talked about you'll see in our report on India is unleashing the full potential of the private sector. Now, one thing which in India, despite the fact that the macro fundamentals are good, balance sheets of corporates and the banks are in good shape, private investment has not picked up at the speed at which one would like. And so in that context, given the fact that there is much more room for private sector to expand, these reforms, the GST reform is a big push, which will help improve the business environment, lend to greater policy certainty, which should have an impact on private sector investment going forward.
Right, that is important. But after the GST reforms, you have mentioned this time and again that India needs strong structural reforms if it wants to maintain an 8% growth rate on an annual basis. Having said that, after GST, what is the kind of reform that you would expect or hope for that could unleash the animal spirits in the economy?
So you're absolutely right in the sense that for our medium-term growth for India is 6.5%, and India's aspiration of being a developed economy by 2047, Viksit Bharat. For that, India needs to have a growth rate of at least 8%, and that would depend a lot on the structural reforms. Because, as I said, the macro fundamentals, the macro policy framework is in pretty good shape. What it needs are serious structural reforms, and here there are not just one; there are many. I would think one in terms of first, you talk about trade tensions right now, but I think we have talked about in the past too that to compete in the global world, India needs to have greater trade liberalization so that companies can import at a lower cost. They can compete with the likes of China in the global arena. Going forward, also, it's important that the labor laws which have been approved should be implemented, because if you want to scale up the way China does, you have to have labor laws which would allow that. So that's the other reform. But beyond that, there are important reforms that could be done on fiscal frameworks, in terms of the bankruptcy frameworks, in terms of improving the business environment. So there are many reforms which are needed, not just for now, but which will have greater impact over the medium term, if you want to achieve the 8% growth. So a number of reforms, we have outlined these in our report, which will be forthcoming soon on India, where we talk about how anything in terms of you want to unleash the potential of the private sector, these structural reforms will be much needed.
Right. Just to speak to you about closer trade integration, you mentioned more trade deals. We're negotiating one with the US, one with the European Union, also with Oman, with Qatar, and a number of other countries. But would you say specifically greater integration with Asian economies, that is more important? Should India revisit its decision not to be a part of RCEP?
So I think, Parikshit, we have done some work on regional integration in Asia. And what we find is that Asia as a region, it does very well when it comes to intermediate goods. Integration is pretty good. When it comes to final goods, Asia as a region depends a lot on demand from the EU, from the US, and so on. So there's a huge amount in terms of what can be done, regional integration. And what we find is that if you look at trade deals in Asia, trade agreements in Asia, the amount which can be legally, the provision which can be legally enforced are much weaker. So there are a lot more of non-tariff barriers across many countries in Asia. So what we argue for is that with greater integration through lowering of non-tariff barriers, Asian GDP could go up by as much as % over the medium term, and some countries in particular would benefit a lot. Some regions would benefit a lot. Now, South Asia, India included, is not very well integrated in the region. So I think in terms of the deals they've done so far, in terms with, say, the UK, they're pursuing one with EU, they're pursuing one with Australia, all that is very good. But also greater integration within the region would be good. So RCEP would be something which they should consider also.
All right. So you feel that RCEP is a trade pact that India should really consider joining. I'd like to ask you about artificial intelligence. Now, the IMF has spoken about the AI bubble and what could happen to artificial intelligence. Maybe it could go bust. But we had also seen reports of the IMF speaking about the AI impact and about 26% of India's workforce being exposed to AI. This is what Geeta Gopinath had said earlier in January. Currently, what impact do you feel artificial intelligence is likely to have on India's workforce in terms of job displacements? Which sectors are the most vulnerable, according to you?
So when it comes to AI, there are both upside and downside, right? So as Geeta had mentioned in the past, so there are significant upside potential of what India can reap from AI. However, if you look at Asia in general, let me talk about Asia a bit. Asia can benefit a lot from AI, and some countries are much better prepared. For instance, Singapore ranks very high in being AI prepared. For India, I think if you want to benefit from AI, there have been some significant reforms are needed in terms of making sure that your labor, that your skills, that your workforce is well skilled. And that's where the impetus has to be placed. So, if you want to benefit from AI, you want to safeguard against the potential risks, the important thing is to build good infrastructure, the digital infrastructure, which India is already doing. India is really at the forefront of building the digital public infrastructure, which is a big thing. But getting your labor force skilled, I think, is very, very important. I think that's where, revamping your education system, how universities train their students to cope with this new challenge of AI, which is a big opportunity, will be very important. So I think that's where the emphasis needs to be placed.
Right. And when it comes to the AI bubble, do you feel there is at a point which we'll see in the next few years where we might see this bubble going bust?
At this point in time, we see a lot of potential in terms of how AI can help, improve productivity and growth across countries. The issue there is one, of course, is if you look at AI itself, around the world, 40% of the labor force is there are sectors which employ 40% of the global workforce, which could be impacted by AI. And the other issue is some countries are better prepared than others. If you look at overall impact of AI, you could have as much as 0.1 to 0.5 percentage points of global growth could be higher. Some countries, some regions which are better prepared will benefit. At this point in time, we would like to emphasize the potential of AI, but also emphasize the fact that you need to have the right kind of governance so that you safeguard those who could be affected adversely. But at this point in time, we see significant potential from AI and especially regenerative AI.
All right. Thank you very much, Krishna Srinivasan, for joining us with your outlook on India and the kind of structural reforms India needs for a higher rate of growth as well. Let's slip